Good afternoon, everyone. It's 20 past 5 on Tuesday, the 21st of September, the autumn equinox. One day to go before the big Fed news, and clearly an awful lot of headwinds. We've got the Fed, we've got this US debt ceiling that's worrying an awful lot of people, including Helen Yellen, and we've got this company in China that's gone belly up in quite a big way. So we had a very strong down day on the market yesterday. Well forecast on here, as you can see. An awful lot of red on VectorVest, and all the measures of the market, in fact, are down, including the longest term measure of the trend, the confirmed down. So at the moment, VectorVest does not advocate buying any stocks at this time. Okay, so let's not just run in there and try and catch a falling knife. As you can see, the buy-sell ratio yesterday fell to 0.25. In other words, 4 times more companies on a sell recommendation than on a buy recommendation. That's in fact improved a little bit today. That 0.25 from what the research guys tell me on the buy sell ratio, that defines a mega oversold situation, and today we've had a little bit of a bounce. Nothing worth yet, and the advice VectorVest doesn't advocate buying stocks at this time. I think good advice. So if we have a look at the VectorVest composite itself, that's the VectorVest composite, which is this equally weighted index of all the shares we follow in North America. That's the gap down yesterday, and the red and the green triangles are the primary wave, or the short-term trend on VectorVest. And as you can see, the primary wave is in fact called this market exceptionally well, and the primary wave is down, I think, from about the 8th of September from memory. Yeah, from the 8th of September. It's now the 21st. So the primary wave was warning us of this seller for quite a long time. As you can see, momentum indicators and the buy-sell ratio well in the negative territory here. I pointed out at our user groups this bearish engulfing candle, and we'll look at that in a little bit more detail on the 24-hour market in a second, and on the S&P. And then this multiple inside pattern, which in fact broke down in great style yesterday. What's going to happen now? Well, I want to look at the S&P 500, which is a market that I trade myself. We'll look at it on the cash market, and then we'll look at it on the 24-hour market in a second. I've had this rising wedge on my charts for quite a long time, and rising wedges are not easy to trade. That's the wedge 1, 2, 3, 4, and 5. 5 waves up. Not easy to see, and you really can't define it until you get to this point. My own construction for a target on that is in fact a line from 1 to 4. And I'm reasonably pleased with how that worked yesterday. And as we'll see in a second, the levels tend to be better on the 24-hour market. Went right through it, and then it closed right at 4,350. And I've been speaking about that 4,350 level for quite a long time now. As you can see, the stochastic is right down in the buy zone. That means nothing, but I think with the buy-sell ratio and a mega over sold situation, we can expect a bounce, and in fact I think that bounce is doing its best to occur this afternoon. So let's just look now at the 24-hour market, and there's the 24-hour market. That's a daily chart, and as you can see, the stochastic is similarly in a oversold position. The stochastic is showing a reverse divergence right way back to here. From that low, market's making a rising bottom, and that's making a falling bottom. The stochastic is slightly different in the 24-hour market because the closes are slightly different, folks. So something that's also really important, this is a very important level here, folks. As you can see, this resistance became support here. And that's always a good place to start your fib from. The question I'm asked more often is, where do you start the fib from? And sometimes I haven't got a good answer because I've been doing it for so long. But that is a 78% retracement, and the market hit that 78% retracement yesterday. So I think that we've got probably a nice bounce in our hands. Is it going to go up to heaven from here? I haven't got a clue. But I would suspect we're going to get a bounce on our hands, and all we've got to do then will be to follow the VectorVest indicators to see if this move can follow through. If we look at the weekly chart, we can see on the weekly chart, the weekly stochastic is in overbought situation, has in fact just come down through the 80. So that's saying that there's more downside here, although it didn't do much here, it didn't do much here, and that one has produced so far quite a nice little move. So I think, folks, that we have to be very careful here. The trends are down. If we go back to the daily chart, if we saw this stochastic going back up over 80, and this market can't get up through that high, and then we get a reversal pattern, then we could quite easily have another leg down here. So I think we're probably okay for a day or two, and then 3 to 5 days up, if the stochastic gets back up there and we get a reversal pattern without breaking that high, we can easily have another leg down here. Just remember, there's a Fed tomorrow, and we'll see what he has to say. Janet Yellen has been, I called her Helen a moment ago, Janet Yellen has been talking up this American debt ceiling. I think she's just trying to make everybody aware of the consequences of a long drawn-out battle similar to what we had some years back. And then, of course, we've got this company in China that can't service its debt. Is this going to be another Lehman moment? The city analysts this morning say no. They say that there's no comparison between this Chinese company and Lehman's. Let's hope that they're correct. So I have some positions in the American market. I've been very, very wary of the American market. If we go back to the VectorVest composite and we look at this over the last year at least, we can see that this thing has been going nowhere and there's been no breadth in the market at all. So I've been really pulling back in this American market in this period. And I'm probably getting too conservative and old for this business. But they say that there's old traders and there's bold traders, but there are no old bold traders. If I go to my viewers tab, I'm still holding on to Deckers. I'm disappointed that it hasn't done better today. Now, these positions I've got, DEC, HCA, the stop loss is at entry on those two. And Square, I'm still underwater, and I'm holding it because I really like the Gartley pattern that's on Square at the moment. If we go to 3 months here, you can see this pullback in 3 waves, this push off this 78% retracement, and it's doing its best to get up here in a pretty ghastly market indeed. So I'm not going to be looking at any new positions until I see some green light on the front page of VectorVest USA, and I don't see any there today. So that's my best shot at this, folks. I think we've got to be very, very careful, and we could easily have another leg down. If you look at this, since 2000, since the COVID thing, you can hardly see the pullback. Okay, so but I think it will make a right shoulders here. Now, speaking of right shoulders, we have a look at the gold market, and the gold market, based on my double stochastic, which is a daily chart and a weekly chart, I'm long of gold. I'm long of gold at 1767. My stop loss is at 1752. And it's going a little bit my way. It was looking much, much better a moment ago. I like this thrust. I like the 3 waves back. If I didn't trade it, I wouldn't be following my rules. That's exactly 62% of this. Both stochastics are in a overbought situation, both the weekly and the daily time frame. And I have no idea what's going to happen next, but all I know is that I'm risking $15 to make, hopefully, the next level would be 1836. If we get up there, that would be a wonderful risk-to-reward ratio. I'm reasonably happy with that, not because I know it's going to be a winning trade, but because I've followed what I've been doing for many, many, many years, and it's been very profitable over that period. And as many of you remember that I was long in this bit here. Didn't get out in time, should have taken my money off at those old highs, but as I tell the UK people, they all end badly. If I'd taken profits there, the damn thing would have gone to the moon. I got stopped out at 1802 under these lows. Okay, so reasonably happy with that. Let's see how it goes. Back to the American market, nothing much has changed. S&P giving back a little bit, up 19 points on the day, and we're going to be a very noisy couple of days ahead of us. So just be very, very careful with open positions. If you can get your stops to entry, maybe lighten a little bit. The market will be listening to every word that Mr. Powell utters tomorrow afternoon. Read this taper. In the UK, I haven't done much, and I'll do a video on that later in the week. I'm reasonably happy with all the shares that I've got there. Mining has taken a bit of a hit, and I'm still looking at SLP and Jubilee for an entry when the dust settles. Take care of yourselves. Bye-bye.